Welcome to the Peninsular Pensions Guide, to the Police Pension Scheme 2015. In this guide we are going to look at the benefits of being a member of the scheme, how the police pension scheme works, how much it will cost you to contribute to the scheme, when can you access your pension benefits, the options available to you when you retire, other benefits of being a scheme member, opting out and rejoining the pension scheme, and ways of increasing your benefits. By being a member of the Police Pension Scheme 2015, you will be entitled to an annual pension for life, the option to take a tax-free lump sum on retirement, ill health cover should you suffer from illness and be forced to retire, and death benefit cover for your partner and children. The Police Pension Scheme 2015 is a career average revalued earnings pension scheme, bit of a mouthful, so we tend to call it a career average or care scheme. So how do you build up pension? Each year you accrue a slice of pension from your pay. This is calculated by dividing the pay you pay pension contributions on by 55.3. At the end of year, an increase is added to your pension. This is at the rate of CPI, plus 1.25%. This is to inflation-proof your benefits. When you retire, the total of all your pension slices form your pension. By calculating your pension in this way, it will reflect the average of your pay across your career. How does your pension account work? Each year, you accrue benefits in your pension account. The scheme year runs from the 1st of April to the following 31st of March. You start each year with an opening balance. During the year, you add pension to your account. The sum of your accrued pension is then revalued. The total of this gives you the closing balance for the scheme year. Your closing balance becomes your opening balance for the next scheme year. In this example, we start off in scheme year 1, with an opening balance of 0. The pay this person has paid pension contributions on, in year 1, is £21,402. We divide this by 55.3, which gives a pension of £387. We then revalue this amount, in line with CPI, plus 1.25%. This gives you a closing balance of £392 per annum. Please note, for CPI plus 1.25%, we have just used 1.25% as an example, as we don't know the future CPI rates. We carry the £392 forward to scheme year 2 and repeat the process. The pay the member has paid pension contributions on is £24,780. We divide this amount by 55.3, which gives a pension of £448. We then add the balance of £392, brought forward from scheme year 1, and revalue the resulting amount. At the end of year 2, this gives a pension of £851 per annum. We carry the £851 forward to scheme year 3, and repeat the process. This process continues throughout your career. The result gives you your pension payable at normal retirement age. How much will it cost you to contribute to the police pension scheme? Contributions are based on your rate of pay. For salary less than £27,000, you will pay 12.44%. For salaries between £27,001 to £59,999, you will pay 13.44%. For salaries of £60,000 or more, you will pay 13.78%. The percentages quoted are correct for 2021-2022 and may change in the future. If you work part-time, your percentage will be determined by your full-time equivalent pay. But you will only pay contributions on your part-time pay. Your normal pension age in the police pension scheme is age 60. You can, however, retire between age 55 and 60, but you will suffer an actuarial reduction of your pension benefits for early retirement. The reductions are based on the time to your 60th birthday from your retirement date. The reduction works out roughly to be 4 to 5% for each year you retire early. There is a difference between the reduction amounts for retiring as an active member and taking your benefits early from a deferred benefit. Taking your benefits from active status at age 55 would result in a reduction of 21%. If you were to take your deferred benefit at age 55, the reduction would be 48%. This is because the reductions are based on a normal retirement age of 60 for an active member and your state pension age for a deferred member. The nearer to age 60 you retire, the less the reduction to your benefits. Any reductions do not affect your survivor benefits, which are calculated on your benefits before reduction. When you retire, you are able to convert some of your pension for a lump sum. This is known as commutation. Up to 35.7% of your pension can be converted to a lump sum. This amount applies up until the age of 64. If you were to retire later than that, the pension that can be converted is reduced. For each £1 of pension that you give up, you will receive £12 of lump sum. Your lump sum payment is tax-free, up to £268,725. In this example, the member has a pension of £30,238. They elect to give up £10,794, which is 35.7%. This leaves a pension of £19,444, and provides a tax-free lump sum of £129,528. Other benefits of being a member of the pension scheme are: you receive tax relief on your pension contributions. Your pension is revalued each year to inflation-proof it. The scheme provides for ill health and death cover, and you receive pension accrual support whilst on reduced sick pay or maternity pay. Your pension contributions attract tax relief. They are taken out of your pay before you pay income tax, therefore reducing your taxable earnings. In this example, this member, who is contributing to the scheme, has £2,000 gross pay for the month. They have tax-free allowance of £1,048, correct for 2021-22. Pension contributions of £269 are deducted, at the rate of 13.44%. This leaves taxable income of £683. The tax deducted is therefore £136. A person who is not contributing to the pension scheme has the same taxable allowance of £1,048. Their taxable income is £952, and they will pay tax of £190. This person is therefore paying an additional £54 tax by not being in the pension scheme. So £219 pension contributions only cost £215, as £54 would otherwise be taxable. This diagram shows you the effect on your benefits if they were revalued in line with CPI only. Your pension slices are revalued each year to stop inflation reducing your purchasing power. This example shows what would happen with 1% inflation over 10 years. If the revaluation is in line with inflation only, then the purchasing power will remain the same. Your £500 pension slice today would still be worth the equivalent of £500 in 10 years' time. Your police pension actually grows by 1.25% above inflation, so your purchasing power will grow over time. In the example here, in year 1 your pension increases by 1% inflation, plus 1.25% extra. By increasing above inflation, your purchasing power has increased by 13.2%. So after 10 years, your original pension slice, worth £500 today, would be worth the equivalent of £566 in 10 years' time. This is an increase of 13.2%. If you suffer any periods of reduced pay, due to sickness or maternity, this does not affect your pension accrual. During these periods, you will continue to accrue pension, as if you were on your normal rate of part-time or full-time pay. This is known as assumed pay. However, if you have any periods of unpaid leave, or zero pay, your pension accrual stops. If you were to suffer ill health, whilst in employment, your pension benefits may be brought into payment. There are 2 levels of ill health retirement, which are the lower tier, where you are classed as disabled from police employment. If you fall under this level you can access your accrued pension, and will also be given the option to commute some of your pension for a lump sum. The higher tier of ill health is where you have to be disabled from all regular employment. In this case, your pension would be calculated the same as the lower tier, but you would receive an upper tier addition, which is determined by your service. You would then have the option to commute some of your pension for a lump sum. As an active scheme member, if you were to pass away, with at least 12 months service, a death grant of 3 times your annual pensionable earnings, at time of death, would be payable. You are able to nominate who this will be paid to, by completing a form on our website. However, if you have a spouse or civil partner, it will automatically be paid to them, overriding any nomination you have made. When you die, your survivors, which include your spouse, civil partner, or declared partner, and any eligible children, may be entitled to receive benefits. The benefits which may be payable will depend on whether you die as an active member, a deferred member or a pensioner member, whether you die after you leave the police force, or after you opt out, the length of qualifying service, at the date of your death. If you have opted out, or have left the police force, at the date of your death, any survivor's benefits would be based on any deferred pension, to which you were entitled, at the time. Under the 2015 scheme, all adult survivor pensions are payable for life, irrespective of whether the survivor remarries or forms a new partnership. If the adult survivor is also a member of the 2015 scheme, they are still entitled to payment of an adult survivor's benefit. Your spouse, or civil partner, is entitled to a pension from the 2015 scheme, if you die, whilst receiving a pension, or with an entitlement to receive a deferred pension, when you reach your state pension age. The pension payable generally is 50% of your pension entitlement, at the date of your death. If you die whilst an active member, and have at least 2 years qualifying service, your spouse or civil partner is entitled to a pension, when you die. The pension payable is 50% of the ill health pension that you would have received if you had been permanently medically unfit for regular employment at the time of your death. The pension payable to an eligible child is generally 25% of your pension entitlement at the date of your death, but if there are 3 or more eligible children, each receives an amount equivalent to 50% of your pension entitlement, divided by the number of eligible children. The pension entitlement, for this purpose, is on the same basis as for adult survivors. For example, if you die whilst an active member and have at least 2 years qualifying service, it is 25% of the ill health pension that you would have received if you had been permanently medically unfit for regular employment at the time of your death. So how does your pensions accrual work while you are on reduced or zero pay? From our diagram, you can see that in April, the member is paid £2,000. We divide this by our accrual rate of 55.3. This gives you an accrued pension of £36 per annum. We can see in May, the member is only paid £1,000, as they are on half pay. In this situation, the assumed pay is £1,000, to top the pay up to the previous level. You can therefore see, there is no change to the accrued pension. In June, the member receives no pay, therefore, there is no pension accrual. In this case, the member will have a period of lost pension, and will be given the option of purchasing the lost pension on return to work. Assumed pay applies when a member is on reduced sick pay, paid adoption leave, paid maternity leave, paid parental leave, paid maternity support leave, or paid adoption support leave, receiving statutory pay, unpaid maternity leave, during the first 26 weeks of maternity leave, or a military call-up. Following a period of unpaid leave, lost pension can be purchased for unpaid adoption leave, unpaid maternity leave, unpaid parental leave, unpaid maternity support leave, unpaid adoption support leave, and unpaid sick leave. You are able to opt out of the Police Pension Scheme 2015 at any time during your career. While you are not a member, you are not covered by the Death in Service Grant or ill health enhancements. What happens to your benefits depends on how long you have been in the pension scheme. If you have been in the scheme for less than 2 years, your contributions would be refunded, and all pension rights extinguished. The exception to this is if you have transferred in other pension. If you have been a member of the pension scheme for 2 years or more, you would be entitled to deferred benefits. The same rules apply if you resign from employment. Deferred benefits are awarded to you if you opt out or leave employment with 2 years or more in the pension scheme. Your benefits are frozen, and payment is deferred until your state pension age, which can be between age 65 and age 68. The deferred benefits increase each year, in line with the Consumer Price Index, CPI, after you leave employment. If you were to pass away with deferred benefits, payment of any applicable partner or children's pensions would follow immediately. Your deferred pension can be brought into payment early, should you suffer from ill health. To qualify for ill health benefits, you would need to meet the higher tier threshold, which means you must be disabled from all regular employment. So what can you do with your deferred benefits? You may be able to transfer them to another pension scheme. This is dependent on the receiving scheme, not offering flexible benefits. This tends to limit transfers to other public sector pension schemes. Your deferred benefit may be aggregated with future employment, should you rejoin the police pension scheme. You may access your deferred pension at any time from age 55 onwards, with an actuarial reduction. The reduction reduces the nearer you get to your normal pension age. Otherwise, your benefits will be paid at your state pension age, between 65 and 68. When your deferred pension becomes payable, you will be given the option to commute some of your pension for lump sum. Here we have an example of the actuarial reduction you would suffer if you retired at age 55. You can see at age 55, you are retiring 13 years early. This would result in you suffering a reduction of 48%. The nearer you retire, in relation to your normal retirement age, the less the actuarial reduction applied to your benefits. If your benefits are brought into payment on health grounds, the reductions do not apply. You are able to rejoin the Police Pension Scheme 2015 at any time. Your previous deferred or unrefunded benefits will be aggregated to your new benefits. If you rejoin within 5 years of the date you left your previous post, you will gain 1.25% above inflation revaluation on the accrued benefits for the period you were not in the pension scheme. The following example shows the advantage of rejoining the police pension scheme within 5 years. The example uses 1% inflation. If you rejoin within 5 years, you will receive inflation plus 1.25%. If you rejoin after 5 years, you will receive inflation only. In the example here, we start with an accrued pension of £1,500. If a member was to rejoin after 3 years, they would receive inflation, plus 1.25%. Each year from there onwards, they would receive inflation, plus 1.25%. The value after 6 years, using inflation, at 1%, plus 1.25%, would be £1,715. If the member was to rejoin, after 6 years, the £1,500 would increase by inflation only. The value after 6 years would be £1,592. In both scenarios, inflation plus 1.25% would be payable going forward. As part of the Police Pension Scheme 2015, you are able to transfer in pension rights from other pension schemes. The request must be made within 12 months of joining the scheme. If a request is made outside of the 12 months, the police authority have some discretion as to whether to allow it and consider each case individually. The old pension is converted into a cash equivalent transfer value and transferred into the police pension scheme. This purchases an additional slice of pension. The amount purchased is dependent on the amount transferred from the previous pension provider and actuarial factors. Transfers from schemes in the Public Sector Transfer Club will revalue in line with the sending scheme. Other transfers will purchase normal pension slices, which revalue with CPI plus 1.25%. If you are an active member of the police pension scheme, you may opt to make additional pension payments to increase your retirement benefits for a period of service, or your retirement benefits and death benefits for a period of service. This can be paid for by periodical payments or a lump sum payment. You will only be able to exercise the lump sum option if you have been an active member of the scheme for a continuous period of at least 12 months, and you have been provided with a statement of the amount of added pension. The additional pension contributions purchase extra pension slices. There is a limit of approximately £7,000 added pension in a year that can be credited to your pension account. This limit increases each year in line with pensions increase award. The value for 2021-22 is approximately £7,077 given the factors. This would mean the maximum payment would be £60,000 plus. Additional pension purchased is revalued in line with inflation and does not receive the additional 1.25% you receive on your normal benefits. The information contained in this video is the author's interpretation of the current regulations. The information is subject to change due to various factors, including, but not limited to, changes to rules and regulations introduced by the Government Actuaries Department, GAD, His Majesty's Revenue and Customs, HMRC, and/or the Home Office. Changes can happen at short notice and may be implemented prior to the Home Office issuing any future revised documentation. Readers should take their own legal and financial advice on the interpretation of any particular piece of legislation. No responsibility whatsoever will be assumed by Peninsula Pensions for any direct or consequential loss, financial or otherwise, damage or inconvenience, or any other obligation or liability incurred by readers relying on information contained in this video. If you have any questions about the content in this video, you should contact your pension administrator. This video has been produced by Peninsula Pensions, who are part of Devon County Council. The information in this video is freely available, but the video is only to be used with the permission of Peninsula Pensions.